I'm Alexis, CEO of She Transacts, and I'm here today with Kathy from NewCastle Finance, and she's going to be sharing with us and all the founders here at She Transacts what she does, some really helpful tips and insights that you may need for your business. Thanks, Kathy, so much for joining us today. We're thrilled to have you at She Transacts. And let's start off from the top about what you do. So what is a fractional CFO?
Alexis, and hi the community. I'm so happy to be here, and I'm really happy to share all the knowledge to help you. So what is a fractional CFO? I know it sounds kind of like a really complicated title, but it really isn't. So essentially, when you think of the big companies, they have someone to take care of all their finances, all the accounting, all the bookkeeping, all the treasury departments, all of that. And they have the main person to do all of it. So the small businesses don't have that, but they still need it. So what the fractional CFO does, you have someone to take care all of that stuff for you, but you only have them on a part-time basis, on a fractional time. So you might not have the need or the funds to afford an actual CFO, a full-time CFO. And frankly, you don't really need one until you hit like multiple $1 million, but you still might need that expertise. So that's when you will go and find a fractional CFO. And we also go by a couple of different names too, depending on how people want to call themselves. You can find them under fractional CFO, of course. Then there's virtual CFOs. And the other one is outsourced CFO or a part-time CFO. So those are all the same type of people, but they just call themselves differently.
That's super helpful because, as you know, if you're trying to search or find this on your own, it can get a little daunting and you're not sure if you're looking in the right spot or if they're the same thing. So thank you for sharing that. That's a super helpful tip. What types of tasks could founders be outsourcing that would fall under this title of a fractional CFO?
So there are essentially two levels of it, and depends on where you are in the cycle of your business. So if you are pre-revenue or pre-funding, you can contact the fractional CFO to help you with your pitch deck, especially with your financials, with your model, with your business model. If you need another set of eyes to take a look at it and actually take all the assumptions that you have about your business and to develop a financial model for you so that you can show it to your investors. If you don't want to hire a fractional CFO for that particular piece, because it can be a little bit more expensive, you can go into a financial modeler. So you can go and find an actual specific just financial modeler. They won't look at the entire business idea and go more into the depth and the strategy, but they will still be able to go and develop a financial model for you so that way you know that you have a really good set of financials that you can present to your investors, potential investors.
Wow, that's huge. And to have somebody have already looked at that, who could see those insights and those blind spots that we may not be seeing because we're so busy thinking about fundraising and pitching to investors. That is a great moment and definitely something I'm sure a lot of the founders will be starting to put into their fundraising process, which I love. So as you get to post-funding and revenue stage, what types of tasks then could a founder be working on with a fractional CFO?
There's a lot of it, and depends on a fractional CFO is what they specialize in. But essentially, what they can pick up for you, you're going to be if you don't have the business from before, they can figure out what accounting services you need. They can figure out how to source that, what accounting software you should be using, how you should be set up all your accounting, your chart of accounts. They can help you with all of that, and then outsource that to your accountant. And then the big pieces are, of course, I always say that accountants and bookkeepers, they deal with the past and some of the current reporting, but CFOs are very strategic. They look at the future of your business. They're going to be able to help you with the strategy of your business. Where are you going to be 3-6 months down the road, a year down the road, even 5 years down the road, what you should be thinking of. They really become your partner in the business. So they're a part of your leadership team that are going to be able to support you in your decision making so that you really have a business that it's not growing too fast, because that can be a huge problem, and that it's healthy and it's sustainable.
That is so important. I mean, everything we do at She Transacts is all about sustainability. Is this something that, again, is it too early? Is it growing too fast? Those are all things you need to look at the full roadmap. And when you go down that path, what that really looks like, and then what those ramifications are, to make sure that when you are making a decision to move forward, it's not just based off of excitement and opportunities, or vice versa, making decisions because you think you don't have an option. So really having somebody with those insights that can really provide you with options you may not have even considered. Yeah, that's super critical to an early stage founder for sure.
And also the other piece of it too is, once you get the resources from the investors, or even if you're bootstrapping it, how do you stretch that so that it's going to last you longer? So really thinking about, what is it that I can use the funds that I've gotten so far that I can really get the most bang for my buck at this point.
That's so important, because that's our runway. I mean, we all know fundraising, we have to be very careful about zombie money, which is where you're just raising money to get you to your next check, but it's never actually going into this strategy that you're talking about, actually growing your business and reaching those goals. So that is super, super important to incorporate. And tell me a little bit about, the framework of what businesses need to have in place. Everybody is at various stages of their business, or maybe they've been totally focused on marketing, or they've been totally focused on fundraising. So what are the types of things they need to have in place, or documents? What's the prep work look like for them to consider working with a fractional CFO, or they should start thinking about having?
Yeah, and that's a great question, because a lot of people think that, I have my bookkeeping and I have my accounting done, I do my taxes, and that's it. But when you really go and build a business, and especially when you have investors, they're going to be looking at your numbers. So just having, a couple of reports that you're going to give them might not be enough for them to feel comfortable with it. It might not be enough information for them. So they're going to keep asking you questions, and there's going to be all sorts of conversations that you have with them. You want to come to those meetings well prepared.
Yeah.
So the way how I like to explain what people should be thinking about when it comes to their finances is essentially in an analogy of a house. So when you think about what do you need for a house to stand, right? There's a lot of things that go into it, but there's essentially 5 pieces, and there are 5 pieces of the finances that you should be thinking about. The first one is, we talked about, is the foundation. That is your bookkeeping and your accounting. It's essentially taking all the information, all the business transactions that are happening in your business, so that you have timely and accurate reporting in your business, and that you know what's actually going on, and that you can do your tax compliance. That's a big piece.
Yeah.
So that's your foundational work, but there's a lot of other pieces. So the other piece is, if you think what else the house needs, it needs walls to stand to support everything.
Yes.
And that is your financial analysis. Okay. So you're taking all that data that your accountant and your bookkeeper put in, and you're looking at the trending, what's really happening in your business. Are you seeing certain customers, for example, not paying you on time? Are you seeing certain trends in your business? Are you becoming a seasonal business? Do you see more business coming in let's say summer or springtime? And you'd be able to see that when you look at all the data and you analyze it, right? And then the third piece is what I like to call is the interior design of the house, which is, just like you would not put a bathtub in the middle of your kitchen, right?
Unless you had a very good reason for it, you never know. But yeah, normally no.
True. It just doesn't make sense. But you want to use the type of systems and processes that actually make sense for you. So what I see a lot of small businesses when they first start, or businesses in general that they start, they use an accounting system that doesn't really make sense for them. It's too
Yeah.
simplified. So
Okay.
especially if you have a couple of revenue streams that you're coming with, for example, let's say that you have one revenue stream that you're selling products, and the other one that you're differentiating between product and, let's say, services that
Uh,
to support those products. You want to split those so that you can actually see which one is profitable, which one is actually, coming with more money in your business. So you want to be able to split those so that you can analyze it better,
ah,
and so that you're able to see how profitable you are. So that's one piece of it. And the other
yeah.
piece of it is also, like I said, how are you managing your contracts? How are you managing your payments? Are customers coming? And I know most businesses nowadays are going online for those type of processing. They use Stripe or whatever type of processing vendor they use. But if you're just, but you'd be surprised that some are still, send me a check. And do you really want to wait that much to get the check back to
Yeah.
your business, right? Because
Yeah.
that is going to affect how fast you get the cash from your customers.
Yeah.
So that's really important. You might not have all of this information in your business. It is going to evolve as your business grows, as you get more ideas what type of information that you really need to get the insights that you need and to run it well.
Yeah.
Don't think that you're just stuck on this, chart of accounts that you created like 2 years ago.
Yeah.
Your business is naturally going to evolve. So take that into account. It's like things can evolve and you will have different needs in different stages of your business. So don't be afraid to look at it and say, does this really serve me what I'm using right now and where I want to go? Or do I need to make an adjustment? So the next one, when you think of the house, is what protects it. It's the roof.
Yeah.
So the goal of the roof is protecting everything that's inside the house. Make sure that it doesn't get ruined. And in the financial world, that is what the financial planning and strategy does.
Mm.
So as I pointed before, where the CFOs come in to really focus on that is to make sure that your business is healthy, is sustainable, and that 3, 6, 12 months down the road, you're not going to fall into these like holes that you didn't see. And also on the other hand is that you're really getting the most benefit from your business. So for example, and this is a good problem to have, but a lot of people think that, I'm getting all this money, I'm getting all this cash, but I'm just going to keep it in the bank account, for example.
Ah,
And
uh-huh.
when you think about that is when you have cash in your bank account, but it's not, I call this lazy money. It's there, it looks good, but it's not really doing anything for you or for your business. So is
Yeah.
there any way that you could be investing maybe in another product or in another service, or maybe you should be investing like in a bond or something that you get at least some of the return versus that is just sitting
Yes.
there. So when you
Yeah.
think about planning for your business, it's planning for your cash, making sure that you're healthy, and making sure that you can actually see what's going to happen for the next 12 months down the road, or even more, where you
Yeah.
want to be. You might want to sell your business 5 years from now. What needs to happen now so that you can get the most money during that sale?
So that is the roof. What comes after the roof?
And then the after the roof comes the security system, and
Ah.
that unfortunately is the one that gets forgotten the most,
Mm.
because businesses, they're not large or smaller businesses, forget that piece, and that protects the entire house. Make sure that you're not stepping into a fraud situation where someone, if you have, for example, if you have one person doing all of your accounting, all of your bookkeeping, you
Yeah.
really need to make sure that you understand where your money is, where your money is going, and that you have workflows that protect you from someone essentially stealing. I know a lot of people get uncomfortable with that situation, but
Yeah.
but the reality is that the medium fraud for small businesses is $150,000 a year.
Wow.
And that is a lot when your business is smaller and it's growing. So
Yeah.
you want to make sure that you protect it. So what would that mean in practice? For example, you do not want to have someone enter your bills, pay
Uh-huh.
them, and reconcile them against your bank statement, because those are three different touch points. So someone can easily make a fake bill, pay it, and reconcile with the bank account. And if you don't really catch it, they could steal a lot of money from you. So
Yeah.
having those,
It would look good. It would look like, oh, it all matches up.
yes, exactly. So having that workflow in place, either you have another person paying the bill, or you have another person reconciling, or
Yeah.
you have a workflow where they can enter it for you, and you go and say, these are the bills that you check them, and you say, these are the bills that I want to go and pay, so that you know what you're actually paying. And then, when you get your financial reporting, this is the previous parts of the house, you can
Yeah.
actually see, this is what I paid, and this has been my trending for the last, let's say, 6 months. Does
Yeah.
it meet the sniff test, or what I like to call it?
Yeah.
And, or does it look suspicious, right?
Yeah, it's living, it's like a living document or a living, growing house that you're adding onto, because it is always changing. It
Yes.
changes all the time. So it really needs upkeep to the house.
Yes. Yes, exactly. It's the upkeep to the house.
You're going to need a new roof at some point. Well, that's awesome. So what types of tasks do founders sometimes misunderstand or think fall under a CFO role, but that are not typically, or not things that a CFO or fractional CFO would do? What are the tasks that are not in that area?
So there's actually quite a few of them. Fractional CFOs do not do accounting work. They do not do the transactional piece of work. So if you think about it, someone needs to like put all the invoices in, type all the, reconcile all the bank accounts, bank statements, and make sure that you have all the reporting done. This is not what the fractional CFOs do. They will take all that information, and they will plan for the future for it, but they will not be doing the transactional piece. They're definitely strategic. And
Yeah.
and frankly, I mean, you don't want to be paying that much for transactional type of work what you're paying for fractional CFOs. These are two completely different, even skill sets and different levels that you're using these people for.
Yeah, no, that's huge. So accounting, bookkeeping, um, even tax filing
Yes,
would
yes,
be
taxes.
something in
Yep.
there as well, taxes. And is legal something, like if there's a financial issue there and it crosses into a legal question about the product or service or offering, do fractional CFOs also, are they able to offer that type of advice or service?
And that's a great question. The answer to that is no, they shouldn't. Because but what they should be doing is looking at what is it that you need, a particular need,
Okay.
and connect you to the right person that is able to help you. So, for example, for me, if I see a legal issue, because I also do a part of the financial health check that I do with my clients, if I see that they, for example, they do not have a good contract in place, that there are certain pieces missing, it exposes them
Yeah.
financially. So what I would do is I would look for people that would be able to help them in. So that I would refer them to a business lawyer or a specific type of lawyer that they should be looking at. Like, for
Yeah.
example, if you are looking to get a lease on a building because you need, let's say you need a kitchen, or you need whatever, you're doing a restaurant, or whatever you're doing, and you
Yeah.
need to get a lease, you
Okay.
want to have a lawyer take a look at that. So what I would be able to say is, when we put the financial plan together, do you have someone actually taking a look at that before you sign a lease? Because when you're
Yeah.
making a commitment for 3, 5, even 10 years down the road, you want to
Yeah.
make sure that the contracts you're signing are tight, and they're not exposing you financially unnecessarily to something that you really don't want to be going into.
That's so important. seeing how a fractional CFO is so strategic and is almost, in addition to being strategy, really protecting the company in many ways. And in terms of what founders need to be thinking about when they select a CFO, I mean, this is somebody that is so important and strategic to their company.
There are a couple of them. So I like to say there's really three of them that you should be thinking about. One is the personality. This is really a person that you're going to be working closely with. It's a relationship. So asking yourself, how do I feel comfortable with this person? Do I feel like they're actually a good listener? A good CFO should be a good listener. They are advising, so they have to take whatever you say into account. You have to be able to have a good relationship with them. And the big one too is, do they care about your mission? Do they care about your business?
Yeah.
Are they only there just, are you another customer client to them, or do they really care what you're doing? So that's huge. I mean, that makes a much better working relationship, and it's a lot more nice to work with someone like that shares the type of worldview and mission that you have.
Shared with us a little bit what type of experience, when we are talking to someone and we're on that first phone call with somebody, we're clicking on personality, they love the mission, they totally get it, then what experience do we ask for then?
So I know a lot of people, when you first go on a call, they ask, do you have the experience in my industry? And the thing about the CFOs is, you don't really want to focus on that if they have the experience in our industry, because on a leadership senior level like this, you want someone who's seen a lot of things. So I always like to say, you want someone who comes with a toolbox, a giant toolbox with all these tools that they can pull up, that is customized especially to your business. So if you're just in tech, if you're in tech and you're just only looking for tech CFOs, you might be cutting yourself off from different strategies that all these different industry might be able to bring to you, all the best finances and the best strategies that you be benefiting from, just because you're focused on that tech. So don't be focused on someone who's in your particular industry only. Look at it on a broader level and ask them about, what are some of the things that you suggest for me? What should I be looking at? I mean, have a conversation about your business. See how they think. For example, you do not want to have someone who's going to be also a yes person, and I always be careful with that. A good CFO is someone who's going to be able to have a conversation with you and push back and not be scared of that, because they're there to protect the business and you, so that you don't go into a financial rabbit hole and you can avoid it. And they might be able to see a lot of things that you don't, because they come from a different angle. So think about that when you're selecting someone like that.
That's really cool. I love that you brought that up. It doesn't have to be like exactly your industry, don't get too narrow, actually open it up.
Yep. And that is exactly how the incubators work too. Some of the incubators, especially I'm in Chicago, we have 1871. And I've been in their meetings a lot of times. They actually have businesses doing different things. And it's nice because they sit together. They used to before the corona.
But now it's the Zoom room.
And they would have meetings. They would have these mingling meetings, and it would be, you wouldn't even think about this, but you can learn so much from another industry that you might not have even thought about. You might even think about it, say, oh, this is how they do it. How can I apply it into my particular business?
Such a fun thing to be able to do with somebody, and earlier in your company, because so many founders, I think, have just assumed they can't afford it and they can't, so being able to bring someone in earlier than maybe they thought before, because a fractional CFO helps them with the cost aspect, but also helps them during the fundraise. That's really, I think this whole interview is fantastic. And I'm sure a lot of founders are going to switch the way they're thinking about when they're ready, or if they're ready, or what to look for, which is great, like the next steps. So tell me a little bit about, founders can work with like a full provider or full service industry agency. Is that something that there's like the full service agencies, and then there's like an independent provider?
Yeah, and there are pluses and minuses to both of them. So when we talk about the full agency, it means that you have your fractional CFO, your bookkeeper, your accountant all in one place. So you go for, company X provides all of these three functions together.
Okay.
And then when we talk about the sole provider, it's someone like myself. I don't do any of the bookkeeping, accounting. I only do fractional CFO work. But I work with the bookkeepers and accountants. I either source them for the founder, or I work with the existing ones. So there's pros and cons for these type of scenarios. So the major pro is that you actually get a lot more personalized and customized attention when you work with someone who's a sole provider, because when you're with the agency, they really have to look at their overhead. So they might be they have to be profitable, of course, but they have a lot of pressure to only provide the certain services so that they can have the most, so they can serve the most people. With the smaller providers, you don't have to worry about that, because with the smaller providers, they're very custom, and they can be a lot more strategic for you if that's what you need, because they can offer a lot more hand holding. So that's one of the pluses, right? And the other thing is too, that when you work with the agency, you might not be able to select the actual person that you want to work with. And like we said, personality and fit is a huge thing. So you might not have the control of who you actually end up working with on that type of level.
Yeah, that is a huge thing, and something to consider, because working with someone who already knows what you've gone through and the decisions you made, or how you think or how they think, that is like you're picking up with someone who already knows you and your business, versus maybe getting some strategic input from somebody who might be analyzing it very differently than perhaps you are looking at things. So that is good to know, and good to know the differences as founders are comparing. Again, it's one of those things where until you're really looking for a fractional CFO, then you realize, oh, there's all these options and things in between. This is really helpful.
And I mean, it all goes what you're comfortable with and what are your needs. So my advice would be, interview a sole provider and interview an agency. See what is a better fit for you, because as a sole provider, you do not have the access to the all-in-one that you might actually need on that particular stage in your business. Or if you go with a sole provider, they might not have the good processes and support in place to support your business at that stage. So just compare and contrast both of them and see what fits and what works for you.
That's the best way to do it in the beginning. If you have any doubt or wondering what the differences are yourself, but I think these tips are definitely going to give you some great insights when they have those conversations of what they're comparing, like how to compare those apples to apples and oranges to oranges, which is great. What milestones do you need as a founder to have completed before like connecting with you? Like you offer an incredible service, but what do you like to see, or what's the ideal founder, what stage they're in and what they've done before they're really ready to connect with you?
Yeah, the founders that I help are the ones that there's two of them. There's one that already have completed the founding, and they already got the capital from the investors, and now they're trying to figure out how they can use it for actually to build the business, and they need someone to help them with that. So that's one. And the other one is businesses that are already making between $1 million and $10 million in sales.
Yeah.
And because those are the ones that I really see that they benefit from the service that I provide, so that I can take them to the next level. And the other piece, the third piece, is I only work with women businesses as well.
That's amazing. Well, it's so incredible. And we are thrilled to have met you through She Transacts, and obviously been recommended through founders at our system, which is how we vet everybody who comes through to make sure that these are people that have been really highly regarded by our founders in our system. So today was just a little bit of a sneak peek, I think, to some amazing information that you're paying it forward for all of our female founders to succeed. And I'm sure there's quite a few that are going to be really excited to get to work with you when that time is ready for them. And if they're already in that position, you can definitely connect with your resources online. We will have on the platform so they can connect.
Yeah, I will share a resource, my financial health house. You will have that. It takes you through the 5 steps, what you need to be looking at. And the other pieces where you can also look at, I have 2 books that I recommend to founders and to business owners to take a look at and to think about their finances and how they should be looking at their statements, the financial statements, the financial reports. They're both on my website,
Awesome.
NewCastleFinance.us. And if you
Perfect.
click on the resources, you can see them. You will also be able to see the 5 critical mistakes that business owners make. That's more for if you already have an established business, but it's something to think about if you're interested in, so that you're not growing too fast. What is the difference between a cash and a profit? So there are all those resources there for you to look at when the time is right.
That is amazing. That so far exceeds our expectations of what you were going to share today. This is awesome. And definitely we love to have you back. As our founders are growing, they may have additional questions and even want to invite you into their circles and do a one-on-one with the circle, that maybe together they all want to look at some strategies or give some peer-to-peer feedback working with you. So we're excited to have you on the platform and see you in many different ways. And thank you so much for joining us remotely. And we look forward to seeing you virtually more in the future on She Transacts.
Thanks so much, Alexis. I'm really happy to support you.